Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock. For this video, we're going to be going over the latest price targets for the SoFi stock price, and we're going to determine when the stock is absolutely going to surge. We're also going to be going over the latest news updates in regards to the SoFi stock price pertaining to the worsening macroeconomic environment and how it's actually working in Sofi Technologies' favor right now, how investors should remain long-sighted and in this company for the long term if you want to see major stock price appreciation from this company. And then lastly, we're going to be talking about how the management team of this company is absolutely phenomenal and how you can place your trust in them. And then after that, in our next article that we are going to analyze, we're going to be going over 4 main reasons why this is a phenomenal banking stock and fintech company to buy literally right now. So for more videos on SoFi Technologies, remember to go and smash that like button right now. Comment your thoughts down below about how high you think the SoFi stock price will be in the next 1, 2, and 3 years from now. Subscribe if you are new, and without further ado, let's just jump right into today's stories. Right now, Sofi Technologies' share price is worth around $6.17, while stock professionals think that the company is worth anywhere between $7 and $11 over the next 12 months. So if we look at what experts are saying right now, we can actually assume that they think that the current stock price is somewhat undervalued right now, coming in at only $6.17. If you didn't know, Sofi Technologies is a fintech company or a financial technology company that has an all-in-one inclusive app which gives their customers access to various financial services and or financial products. Basically, Sofi Technologies essentially acts as a digital bank, and they have had fantastic performance in regards to their overall revenues over the last few years. But despite that, the Sofi stock price has pulled back majorly recently, which gives long-term investors a fantastic buying opportunity in this stock, and that's exactly what we're going to be talking about. Sofi Technologies has performed very well despite the very negative macroeconomic factors going on right now, where investors are liquidating their technology, fintech, and growth stocks and buying either bonds or value stocks. And even though interest rates are increasing and inflation is out of control, Sofi Technologies is doing quite well fundamentally, and that's what we're going to dive into right now. The company has been consistently narrowing and lessening their overall net losses, and they have absolutely phenomenal adoption and member and product growth for the recent quarters of 2022. Right now, they have excellent growth of around 36.8% quarter over quarter and $2.7 billion worth of deposits, which is really impressive for such a new banking company. Assuming similar outperformance for its bank segment ahead and into the future, we can assume that Sofi Technologies has a great chance at reporting profitability by the full year of 2024, even if macroeconomic factors continue to get worse. And that's why that I think Sofi Technologies is a fantastic long-term buying opportunity, because once this company actually achieves profitability, this company could rally a large amount, and that's what I personally am waiting for. I can't wait for this company to turn profitable, because that's when we're going to start making the majority of our money from stock price appreciation. However, investors should definitely determine their size and their exposure to this particular company based off of their own risk management policies, what they're comfortable with, and their investing strategy. Because we have to keep in mind that this company is not expected to report profitability until 2 years from right now. So in the meantime, what should we do? Well, for me personally, I have around a 4% exposure to Sofi Technologies in my very well diversified portfolio, but I am very excited to see what this company is going to make of itself in the future, particularly if we dive into their financial performance, which is greatly attributed to their overall growth in contribution profit from their lending segment that brings them in the majority of their revenues. And this segment has grown by around 59% year over year in regards to their growth in contribution profit, and their overall technology platform has also grown by around 58% year over year. And on screen, you can see in regards to their overall member growth and their product growth, those are also two things that are growing phenomenally. Clearly, it's apparent that members are loving Sofi Technologies once they actually become a member of Sofi, and using their digital app has really invigorated various investors to invest into this company because their app is very sleek and simple to use. By gaining more members, their products are also multiplying at a rapid pace. The company literally reported an addition of 450,000 new members, which would equate to a 61.2% year-over-year growth, to where now they total around 4.31 million members. SoFi also had an excellent new product adoption in regards to their member growth, almost getting 2 products per single member, where they added in the same year-over-year period around 702,000 new products that they have given their consumers, to where now their consumers have around 6.56 million products. SoFi's financial services products continues to report exponential growth, coming in at a growth rate of 100% year over year, which is absolutely staggering when you look at the overall numbers. SoFi continues to report negative free cash flow, or FCF, and clearly this is not ideal. Nonetheless, investors have nothing to fear given its more than sufficient cash and or cash equivalents balance on their balance sheet in terms of their liquidity, to where they have almost $1 billion on their balance sheet, and that's a fantastic amount of liquidity to have just in case of an emergency. We also want to note that Sofi Technologies has around $3.77 billion worth of long-term debts. However, SoFi appears very well positioned to handle the worsening macroeconomic environment even despite their debts. So at least in the short term, they can keep themselves above water during the current macroeconomic environment, and their long-term debt is not very detrimental to the overall growth of this particular company. If anything, we should actually anticipate even more debt coming in for Sofi Technologies as they continue to gain capital by any means necessary to continuously grow their company. Now, a big investor fear for Sofi Technologies is their stock-based compensation, and I admit that this is a problem for long-term investors. However, nevertheless, it is very evident that SoFi has continued to dilute their existing shareholders ever since their initial public offering. And moving forward, we should be able to anticipate even a further share dilution by around 157.97 million shares going forward. And this is somewhat alarming. However, this is no surprise because bullish investors, or investors that study growth and technology companies, have a higher tolerance for this type of risk, and they are not overly worried. And the reason why they aren't worried is that this is a very common way for high growth technology companies who have yet to report profitability on a sustained basis to actually go through these large phases of share dilution. For instance, if we look at Block, ticker symbol SQ, they have diluted their long-term investors by around 340.9% since their initial public offering back in 2015. And Upstart, which is a newer company, has similarly diluted shareholders by around 322.4% since their IPO back in 2020. Now, with that being said, I do want to say that Upstart has issued a meaningful stock repurchasing program in February of 2022, and hopefully once Sofi Technologies announces or reaches profitability by 2025 onwards, they will also issue meaningful stock repurchasing programs which will benefit long-term investors in this particular company. However, over the next 3 years, this could be somewhat of a problem in the short-term stock price. Now, while this is going on, SoFi is expected to report revenue growth at a compounding annual growth rate, or CAGR, of 38.91%. And the reason why this is amazing is if you can identify a growth company that is growing over a 30% CAGR, that is going to be absolutely insane. So if Sofi Technologies can keep above a 30% CAGR for the next 3 years, that would be extremely impressive, and it's going to reflect very positively in the SoFi stock price. And as the SoFi share price increases, more investors can hop on because they see the stock surging. So it's either going to surge slowly, or once the company reaches profitability, we could see a huge surge in the company despite its relatively high short interest right now. Now, the good news about 2022 is that they are anticipated to report revenues around $1.5 billion or $1.5 billion, which is really going to show investors that this company is extremely resilient even during macroeconomic uncertainty, high inflation, and increasing interest rates, which we will talk about later in the video. Another huge catalyst that is coming up is the student loan moratorium, or the student loan repayment freeze, ending. And the majority of people, including myself, as well as SoFi management, thinks that the student loan freeze or the student loan moratorium won't end until the beginning of 2023, but when it does, it's going to act as a huge catalyst for the SoFi share price, and once that happens, we could anticipate fantastic stock price appreciation. So in 2023, at least in the beginning, we have a huge catalyst coming up in terms of the student loan moratorium ending, which is going to cause the SoFi stock price to surge, or at least it could cause it to surge, and then in 2024, for the full year, we can anticipate net profitability on a generally accepted accounting principles basis, which again is going to ignite the stock price, and then from then onwards, they could start repurchasing shares, which again will increase the overall stock price. So literally for 2023, 2024, and 2025, we have fantastic catalysts coming up for this particular company. But even if those don't happen, SoFi is continuously upgrading and increasing their overall revenue and profitability forecasts from the full year of 2023 onwards. So that is something to really be excited about. Many investors and even analysts are quite bullish about SoFi Technologies and their current share price, because right now we have a price target from this author and professionals of around $11.13, which would equate to around a 75.83% upside from the current stock price, which is why the author logically concludes and he reiterates his buy rating for SoFi stock. Now, I do want to mention exactly what the author said earlier, that you should really practice proper risk management in terms of this particular stock. You really don't want to bet on just one horse in the race. You want to bet on multiple horses, SoFi stock being one of those horses, and it should be accompanied by a very well-diversified and risk-managed portfolio of other fantastic companies, just in case this company actually doesn't work out for the long run, you are not financially ruined. Now, here are 4 other reasons that a Motley Fool article in regards to why SoFi Technologies and their stock is a clear buy rating right now, aside from the fact that they are an extremely innovative fintech and banking company. So the first point that they highlight is that SoFi Technologies owns its own bank, and this separates them from the majority of fintech companies and their competition, because unlike their challengers or competition in the space, SoFi already has a national banking charter, which is absolutely amazing. So SoFi doesn't have to jump through hoops and hire a third party for various products and services, and because they have their own bank and own their own bank, they can offer extremely competitive low interest rate capital to their investors, and they can offer top of the line benefits for their members, which makes them extremely competitive. The number 2 reason to own SoFi shares is that they own their own credit risk evaluation service, and this is absolutely fundamental, because before SoFi Technologies offers one of their customers an interest rate on a loan or a personal loan or a mortgage, they have to evaluate the risk of this person so they can offer them a competitive interest rate on their overall debt. And the majority of fintechs or banks actually have to rely on other agencies to access their FICO credit score, which was developed decades ago by a company called Fair Isaac & Company. However, other more innovative companies such as Upstart uses artificial intelligence technology to actually create their own underwriting policies, which determine whether or not the company can take on this amount of risk and to give this person a loan, even though the traditional FICO scoring system would probably count this person out. And SoFi, I think, uses a phenomenal mix of both of these strategies due to their own underwriting policies and their own credit risk evaluation service, where they don't have to rely on third parties or other companies to do this for them. They are the originators and the risk evaluators of their own loans, which just gives them a phenomenal upside and competitive advantage in the long term. SoFi Technologies is also a behind-the-scenes giant, and this is what I really want to focus on in terms of their Galileo and Technisys platforms. Back in 2020, SoFi acquired Galileo, which owns one of the most popular APIs, or application programming interfaces, which is basically software that runs payment services and much more, where other investment brokerages such as Interactive Brokers and Robinhood actually rely on Galileo's API, which means that Interactive Brokers and Robinhood are actually customers of SoFi Technologies because SoFi owns Galileo due to their acquisition. And then lastly, its losses probably aren't permanent. So just like we talked about in our first article that we analyzed, the losses are intended to stop for the full year of 2024, and then the company is supposed to be profitable on a GAAP basis past then. We have to remember that SoFi is growing at a staggering rate. They have more than tripled the number of overall members using its new credit card products, and as their members increase, their overall products will multiply even more so, giving them even more revenue. Their net revenues have absolutely soared, and because of their compounding annual growth rate, or CAGR, of over 30% in terms of the revenue, this company is rapidly expanding, and that's a great sign of a well-run business from fantastic management. Lastly, I want to add that it's still relatively early to predict enormous profits from Sofi Technologies, but overall, I am pretty bullish on this company, and I think it has a great competitive advantage over the multitude of its competition and its rivals. In the end, it's a great stock to buy now, as long as you don't overexpose yourself to this company, and you add it to a well-diversified and risk-managed portfolio. So with that being said, I would love to hear your thoughts down below. Remember to go and comment what you think of Sofi Technologies down below. Subscribe if you are new, smash that like button if you haven't already, and I will see you in the next YT video.